folks, Deplorable Communications, signing in to give you the broad strokes of the proposed Trump tax plan. So let's jump right into it. I'm going to give you the broad strokes of it, like I just said, and we're going to explain the important points of it. For example, the income tax rates, what they are currently, and what that will translate to for each bracket. So, most importantly, the plan aims to reduce the number of tax brackets that is currently at 7 down to 3. Excuse me. So he's made it very clear that the goal of this tax plan is to make things as simple as possible. Giving a little bit of history on the tax code, it's something currently equivalent to multiple phone books. And there was a journalist who did a report on this somewhat recently. And basically, he called up the IRS and asked them how long it was. They weren't even able to give him a set number of how many pages it is. It's that ridiculous. And Congress delegated the IRS to write all the tax code, so Congress didn't do it itself. And it's just gotten into this stranglehold mess of pages and pages, innumerable amounts of pages that compromises our current tax code. So what Trump wants to do is reduce that to something that when you fill out your taxes, instead of it being pages like it is currently, theoretically speaking, what he proposes and wants to do is you would be able to just fill it out on a postcard, okay, and mail in your taxes and be done with it. So the way we'll break this down is, since it's not set in stone and exact numbers yet, we're going to give a current income tax rate range and kind of go from there. So the three brackets, proposed brackets, would be from the 10 to 15% income tax rate range, and your income tax at that range would be 12%. You would pay 0% on capital gains, and the income levels for those filing at that range, single would be about $0 to $37,500. Married or joint would be $0 to $75,000. Okay, just to kind of give you an idea. The next bracket would be 25% to 28%. The income tax for that bracket would be 25%, and the capital gains tax rate would be 15%. Single persons in that bracket would be making about $37,500 to $112,500. Married or joint couples start at $75,000 and end at $225,000. And then for the third and final bracket, which is the highest, the current income tax rate for that is about 28% to 39.6%, and they would translate to, under Trump's proposed tax plan, 35% and pay 20% on capital gains. Single persons in this bracket would be earning about $112,500 and over, and married / joint peoples would be earning $225,000 or over. So those are kind of the most important broad strokes of the proposed plan for you to digest and kind of look over and see what you think. Now on to the smaller but very important other details. Excuse me. It eliminates personal exemptions. So for example, exemptions allow taxpayers to subtract, under his plan, $4,050 from income for each person they claim on their tax return. That means families with a lot of children would pay higher taxes despite the increased standard deductions. So for example, a married couple making about $56K a year would pay about $70 or so a year more without the exemption, even though there's the increased deduction. And other important points are, it eliminates the estate tax and generation skipping transfer tax. So that helps the top 1% of the population who pay it, which is about 5,000 or just short of it, returns. But they contribute $17 billion in taxes. So despite all the hate the 1% gets, that's a lot of tax money. And the aim is for that money to be fed back into the economy and for people to spend more money than they are. And that's the whole idea behind cutting taxes and all that and handing more money to people and putting more money into the people's pockets is they'll spend more money. And this has been proven. You look throughout history and the Reagan tax cuts and the economy, how the economy roared throughout those times. There's something to be said for letting people do what they want with their money. The proposed plan does keep the inheritance tax for capital gains, but that's excluded if the heirs never sold the property that was inherited to them. So there is a little bit of a break in that department. You do catch a little bit of a break in that department. The currently proposed tax reform framework increases the child tax credit to an amount that hasn't been specified yet. It does increase the income level, so more middle income families can take advantage of the credit, which is nice. It eliminates the marriage penalty as it relates to the child tax credit. So this means two single parents can get the full credit if they earn about $150,000 combined. If they are married, the credit shrinks to about $110,000. That's a little bit less specific than the proposed tax, the proposed tax proposal. Sounds kind of silly, from Trump in 2016, but that's where we're at currently and what we know. The proposed framework allows for about $500 for non-child dependents, so anyone over 18. Currently much less than the $5,000 deduction for elder care in Trump's 2016 plan, but they're two separate categories, obviously, so do what you will with that. Next, and very importantly, the corporate tax rate will be dropping from its current 35% to 20%. And that's a big decrease. And I know a lot of you who are probably libertarians like myself are saying, well, wait a second, Mr. Deplorable. The corporations are evil. Why do they need more of a break? Well, the idea behind this is to kind of give them a bit of a break in their tax situation so that they want to move their businesses from overseas back to America, thereby increasing the number of American jobs and so on and so forth. And so America sees more of that wealth and more of the number of jobs than they do currently with all the corporations that have to do business overseas because of obscene tax rates. It's simple business 101. Makes complete sense. I get it. I kind of like it, to be honest, as much as, everyone wants to see the corporations pay their fair share. I get it. We want to see those same corporations bring more jobs back to America, thereby increasing the number of jobs in America and lowering the unemployment rate. It's as simple as that. He also wants to help smaller businesses and startup taxes and things like that. He wants to completely get rid of those. So we'll see what happens with that when the tax plan is made official and is passed through the House and the Senate, Congress and Senate, House of Representatives and the Senate. But so yeah, those are basically the broad strokes. There is, as some economists are saying, the last thing I'll say is some economists are saying it would increase the national deficit by a few trillion over the next 20 years. So it'll dampen economic growth in the long run, but it will be a very, very sharp shot in the arm to the economy that before Trump got in office was floundering and hurting without question. So it kind of depends how you look at it. I think the way he kind of looks at it is if we can give it the shot in the arm we need to, maybe we can keep at that rate and not have to worry about the long-term, quote, long-term effects that are possible from a tax plan like this. But time will tell. We'll see what the official 100% official tax plan is that gets passed through Senate and etc. But for now, this is what we have to work with. So let me know what you think. Drop a comment below. I'm really curious to see what you guys think of this tax plan. I personally think it looks great. It really will put more money in middle income America's pockets, lower income America's, and even the third bracket will be saving some money with their income taxes and other things like that. Only thing that some people may not be a fan of is people in states like California and New York, because I saw something about property taxes. That's right. I remember now. It eliminates the deduction for state and local taxes, so it's going to hurt residents in high tax states like California and New York, but our respective congressional representatives are already working to combat this aspect of the tax plan, and they're already protesting it. So if we can get that reversed, because I'm a California resident myself, if we can get that reversed, this tax plan is looking really, really purty. I gotta tell you. So we'll see what happens. Like I said, please let me know what you think below. Thanks for watching the video. Please continue to support us by watching the video, subscribing and liking and commenting. We really appreciate it. Check out the website. That's come a long way. The website link will be in the comments. Please enjoy it, and you guys have a great weekend. Thank you. Deplorable Communication signing off. Hi folks, thanks for watching. We hope you enjoyed the video. Please be sure to check out the other videos on our channel, and please support us by subscribing here, yes, here, and checking out the website here.